Welcome back, everyone, to the Risk Intel podcast, powered by SRA Watchtower, where we share risk intelligence with experts from across the banking industry. I'm your host, Ed Vincent, CEO at SRA Watchtower. Welcome back to the Risk Intel podcast. I'm Ed Vincent, and I am really excited to have Dan Bailey and Eric Bonnell rejoining us on the program here today. We had a great conversation about building a resilient ERM framework and what you guys found when you walked into your financial institutions recently, and how you took those teams and colleagues through that journey of getting an ERM program really getting some momentum behind it. We're going to unpack today the topic of tooling and how you went about evaluating existing tools and then considering other tools in the marketplace, and how you kind of took your teams on that journey. Before we jump into that, though, maybe a quick refresher for our viewers here today around each of your backgrounds. So, Eric, if you could start and just give us a little bit about kind of how you got to where you're at today, and then Dan, if you jump in as well, we'd appreciate it.
Sure. Thanks, Ed. I'm Eric Bonnell. I'm the Director of Enterprise Risk Management at First Financial Bank in Abilene, Texas. A long way from home. Started my time on the East Coast mostly. I've been in Iowa, I've been in South Carolina, I've been in Virginia, New York, obviously, and came to Abilene in January to help a $13 billion bank set up an enterprise risk program.
Thanks, Eric.
All right. Ed, thank you. Really appreciate the honor and opportunity to be able to be here and talk with you. And I've known of Eric for a while now. My name's Dan Bailey. I am the Managing Director of Certified Risk Partners. Most recently, though, I was with a $23 billion institution here in the Texas area. Had about, I'm going to call it 25 plus years of risk management, so I really don't give away my age too distinctly. I've had a real pleasure and honor of being not only a consultant for over 10 years in my career in that risk management space, but also 15 or so years have been in that banking industry. But through my consulting experience and where I'm headed with Certified Risk Partners, about 10 different industries, areas of industry expertise or experience relative to risk management. So certainly looking forward to the conversation here.
Great, thanks, Dan. I appreciate it. And Eric, great to have you back with us here as well. In our last conversation, we talked about a number of different themes, including kind of building the foundation first within the ERM program. Where do you get started? We talked about things like risk appetite statements and the frameworks of risk, and we also then talked about partnering and the importance of partnering with folks inside your organization, and then we even got into some obstacles and how do you make your business case and kind of get the organization behind the initiative. One of the areas that we touched on very lightly was scaling risk programs and the value and the importance of tools in doing so. And so I'd like to return to that topic here today and talk a little bit about the use of technology and systems, and what each of you found perhaps when you walked into your most recent opportunities and engagements, and how did you go about evaluating what's there, maybe as the first part of the conversation, and then secondly, let's talk about, well, where did you go from there, and how did you take the kind of the tool sets forward? So Eric, do you want to kick us off perhaps with a view as to what you found and how you went about looking around for kind of what technology was inside the organization and evaluated that as a starting point?
Sure. Thanks, Ed. So I've seen it not work, and I understand how it didn't work. So I took a step back when I got here and said, we're not going to do it that way again. We're going to start with our data and our risk framework and our risk taxonomy. We're going to get that together. We're going to make it easy for people to understand what the risks are, what risks look like, and what the impacts are. Having that as a starting place, then you can start looking at tools, and then you can start looking at tools that make it easy for the end user to enter the data, right? Because that was another big concern with a former tool of ours, is it was very difficult to navigate. So, I guess in a nutshell, it's being able to build the process so that the end user understands it, so that they're able to get cues from your risk framework as to how to articulate specific risks for specific processes and products. And then it builds from there, right? And then once you have the data in there and the data is good and you have all your reference data in there, you can start tying it together. You can tie your RCSAs together to your BCP plans, to your vendors, to your applications, to all of that, and get a full view of what's going on with that particular process, product, or channel. And then the reporting, of course, is important.
I'm going to, I think we could probably spend a little bit of time, more than a little bit of time, talking about that last bit of reporting. But I want to go back to where you started there, Eric, for a second, and Dan asked for you to overlay your thoughts here, because I think it's really interesting, Eric, that you started even before the products or before the tool sets, right, themselves, and you started with the data, right? And that, data is a very broad term, but right, you talked about that encompassing frameworks, taxonomies, as well as raw data itself. So that's a pretty big definition, and that's a large body of work before you even get into the elements of user experience and how do you interact there with the constituents themselves.
Mm-hmm.
Dan, how does that compare to your experience when you arrived?
Well, I would have to say Eric and I are probably brothers from another risk mother, as we bring this together at the end of the day. The reality is I wholeheartedly agree with everything Eric said, and I take I would say very similar, if not the same approach that he took. It's important to have your framework laid out. It's important to lay out your taxonomy. It's important to understand not only what data you have available, but what are the sources of data? What compromises or composes, that data itself, and how do you frame it, formulate it, compartmentalize it? All of that, I believe, is extremely important, as Eric said, and to affirm what he was saying before you select a tool. There's no silver bullet of a tool out there anywhere. I haven't found one in my 25 plus years. Eric, probably the same way, if I would guess. But there are tools that are solid. There are tools. You may have to select multiple tools. My end goal, my utopia from a risk management perspective would be, I would love just one tool I could put everything in. I could frame up my entire risk universe inside the organization, and I could get some kind of a dashboard view, whether it be near real time or real time, on where are my risks, what are the levels of risk I'm carrying on any of my risk stripes, at any given point in time, and then even be able to drill down underneath that, within each risk stripe to the sub areas and the subcomponents. But because that doesn't exist, part of that whole tooling conversation really needs to be, what's really the first tool I need to go after, right? What is that priority? And then how do I ensure that I get something that complements what I'm already working on with or working to implement? How do I complement with the follow-up tool or tools, right? And I would kind of finish off this this section of conversation here for me by saying what I really look for in a tool more than anything else is that it's been built by subject matter experts, because there's lots of tools out there that some process junkie decided they thought they knew what to put together, and they tried it and it just doesn't fit within 90% of the organizations that try to bring it on board.
That's some really great observations. I love that last one in particular around a tool that's built by subject matter experts. But also the commonality that you and Eric had there around data as the starting point. Eric, when you you mentioned there, right, learning from past experience. I won't qualify that experience as good or bad, but learning from past experience there, in starting with the data rather than starting with the tooling. Can you perhaps take us through maybe what happened when you did that in the reverse order?
Yeah, so we intended to do it data first originally. So priorities changed, and we wanted to get a quick win. And it sometimes is tempting to try to get the quick win. Problem was that the team that we chose to do the quick win wasn't really ready with any kind of business requirements. Really didn't know what they wanted. They didn't know how the tool worked. They were less experienced than the risk side of things. I think that we suffered because of that. We spent 6 months putting in a process for a side kind of hustle, and it didn't get used for the reasons I said. It was not usable by the team. They didn't really understand what was wrong with it to tell us how to fix it. It was damaging from a cost perspective, and just put a bad taste in people's mouths. That tool very finicky, and if you don't do it the right way up front, it doesn't work well. So we had a tool before that, and the problem we had there wasn't necessarily the tool itself. The newer version of the tool that we would have selected over this other tool that we put in probably was good, but it wasn't even looked at because of the poor support we had gotten. It was outsourced. I once tried to make a change to a KRI in that tool, called our partners and said, can you change this number to this number on threshold? 3 weeks later, it happened. Just not appropriate. So we were lucky enough to get out of that contract, get our money back for the part that we didn't spend, and put it towards this new tool. And then we had these other problems with the new tool. So it really comes down to make sure you understand your data, what the risk taxonomy is, make it easy for people. Scoring is another piece that's very important. Making sure your scoring is consistent amongst your sub-programs within your ERM program. So your business continuity, you have a 5 scale, but what is that 5 scale against your RCSA? Do they match impact-wise and stuff? So having all that and having your business requirements in place and having a good plan as to how you're going to start and how you're going to start training, it really is, what does the end user need most? Maybe they need to understand risk and control assessments first before they can get into issue management, or vice versa. You got to feel your audience and play to them, and put your implementation plan together in a mindful way that people are going to adopt the tool.
Right. So that, right, we have a software platform in our business that I'd say we built from the inside out rather than the outside in at points in time. Meaning, I think a little bit like you're talking about there, Eric. We essentially said, all right, we're going to build this, and we're not going to look at the big picture. We're not going to go out to stakeholders. We're not going to, right? We know best, as opposed to kind of the outside in approach. And it sounds like, right, you're really driving home the fact here that you have to understand what the organization is ready for and what your stakeholders need, and really doing that work up front in order to prioritize the right area. And this concept of, say, chasing the quick win obviously came back to be a bad outcome there, and a costly one as well, unfortunately for you.
Yes.
The other theme that you introduced there is something that ties back to a conversation that we've had a few episodes ago around this idea of the hidden factories. And hidden factories meaning these processes that just go on in the background that you don't really account for the the costs associated with them. And one of the things we talked about in one of those episodes is, you have this idea that you're going to put a piece of technology in place, but then if you don't follow through and make sure that it is in fact adopted, and that those old, hidden factory processes are eradicated, people will just continue to do things the way which they were accustomed to doing things. And so, you had this great idea of enacting technology, but if it's not embraced and kind of becomes part of the day-to-day, now you're just paying for the old process and you're paying for a new tool, and so you're double paying. You're not getting those efficiency gains. So if you don't see that through all the way through to completion, you're missing the mark.
Yeah, no, Ed, I think you're spot on there for sure. One of the things, I wouldn't say it's a new term that's out here, right? We have enterprise risk management. We understand operational risk management, financial risk management. A lot of what has come forward, if you will, maybe from the regulatory bodies, is they want independent risk management. And I would argue that point very distinctly, in that we need integrated risk management, because the expectation is that risk management is in just sorry, I'm at a loss for my word that I'm looking for here, but it's really spread throughout the organization. It becomes kind of rooted within the organization, and you can't do that if risk management is independent. You second line of defense is a partnership. It's much more effective when it's integrated. But within that integration opportunity, what you've got is the opportunity. You see those processes that you're talking about specifically there, that may be operating behind the scenes, but they're brought forward, whether that's through business continuity, whether that's through your CSA, whether that, any number of opportunities to take some of those potentially hidden processes that aren't normally seen, aren't normally recognized throughout the organization. And it gives them a voice, if you will,
right,
in the organization. And I think that's distinctly important, such that business continuity and third-party risk management and model risk management and RCSA all play off of each other. There are directional arrows both ways amongst any one of those, or all of them collectively, right? I mean, and that's just a small sampling of how that does play together. But we could lose sight of, not lose the process, but lose sight of the processes. So integrated risk management, I think, with a proper tool that helps ensure that the processes are well documented and risk rated, at that point, you don't lose sight of much of anything, I would say, at the end of the day.
I think that concept of independent versus integrated is an interesting one. We've heard that independent comment from some regulators recently, and in particular, they were talking about independent audit versus risk tools. They were concerned to have those, the same tool being used by right, the second and the third lines, and the institution pushed back and said, well, are you telling me that I now need to do these things twice? And they said, and the regulator said, no, they need to be independent, but they can be integrated, right? And so, right, you absolutely should be able to have data flowing from one of those tools to the other tool, right? It's one of our premises as a business is that, right, we don't do a lot of things, but we connect to a lot of other tools, because it's about getting that holistic picture. And so, whatever the tool set is, right, having it integrated and pulling in data from all those multiple different places, so you truly get that holistic view. Dan, to your point, feels like that is really just it's really table stakes, right? Right, risk 100%. Is so interconnected these days.
Yeah, I heard a quote during a seminar not too long ago that has really stuck with me, and I preach this quote as often as I can, because it really, there's some aha moments that come from it. It's such a simple quote, but it applies to second line and third line. Independent does not mean isolated.
That's a great line. Yeah.
So that, that's the level of partnership that I think, risk management in the second line has with the first line, but you can also, second line can have a partnership with the third line. Third line isn't off in their perch somewhere with their binoculars on looking for all the birds, right? That's just not, that's not
Right.
audit's role at the end of the day. Audit needs to understand if we as risk management are thinking about implementing some kind of a new process, hey, how does this align to your expectations from your audits, from your controls perspective, and different things like this, so that audit may not be able to give you a thumbs up or a thumbs down, but they could go, I could see that happening, or some
Right.
kind of a non-fully leading reply, which helps them maintain that independence, but at least they become aware through that level of partnership.
Absolutely. Eric, you talked about the consistency across programs, and right, that ties to this theme of integration and a holistic view. You also talked about, I'll say, the downstream impact, or the downstream way of consuming all this information from the tool, which is dashboards and reporting. So perhaps you could elaborate on that a little bit, and really what you look for there in that part of a tool when you're evaluating a solution.
Yeah, so I'll have to say I'm not sure yet, but I think I know, because I'm building it as we speak. But I think the first place to start is I need a way to tell a story. I need a way to tell the story that here's our risk appetite. Here's why we have this as our risk appetite. And here's where we are. Here's our risks, and here's where they are. Here's the ones that are over risk appetite. And here's the ones that are the priority there, the ones that are the most complex, or the thematic ones, or the ones that are going to be the ones that have the most impact, right? They might be high because they have a high likelihood or impact. So being able to bring that together for the bank, the parent company, right? So I have a trust company too, so they're part of this too. I have my own risk assessment done on that. And then also departmentally, right? So each business unit, I want to have a risk profile sort of built that says, here's where they are against appetite and strategy. Here's where they are against their issues, how many issues they have open, how many relate, and here's their biggest concerns from emerging risk, and have that kind of conversation with the risk committee and with management to say, it looks like 80% of our stuff is in line, but here's the 20% that we really need to spend our time on. And it might be 20% of an opportunity. It might not be a risk. It might be, do you realize that it takes me 5 hours to build this one KRI, to get this number 3 to put on a dashboard? It takes me 5 hours to derive it. If our data was better, or we had more automation, that number would go away. It would just enter into the system, and then I'd be spending my time telling you what the 3 means rather than building a 3. That's the biggest frustration I have right now, being sole person on the team at the bank. But that's the what you're building towards as you mature. That some of that is going to be required. The second, third line, being able to play that out. I think that second line is kind of a coach or a therapist to the first line. I think it also is a coach and therapist to the third line. I think that you need to temper the third line sometimes. They're very enthusiastic. They mean well, and they want to help the bank. And I think that's something that we all need to understand. The level of risk that they articulate sometimes is one-sided, or may not take all the variables into case. So second line, having this integrated system that has risk from different perspectives, can help them to say, well, I know that you think that that's a very high risk, but in terms of the rest of the bank, that's maybe a high medium risk, because we also have these that are really high, that really, why aren't you spending your time helping us to fix this? or why are you spending time on this? Because you can see in the system, we just had examiners in, maybe come back in 6 months when it adds value. Are we still on track? Those kinds of conversations are what I have with my third line to help them to, they're also new. They're trying to get coverage and, trying to get them to have a lighter touch and a little more thoughtful as to what the risk really is and where they need to spend their time.
You identified there that if you're spending less time pulling the data together and doing the calculations, right, you'd be able to spend the time telling a story, and helping the constituents there determine where to focus and walking them through that, right? Whether that's the first line, whether it's the audit team, whether it's the board risk committee. And I think that that's a really important concept for folks to think about. I think that software providers, right, vendors, partners in this space spend a lot of time thinking about features and functions and not enough time thinking about the use case and the problem that is being solved for. And I think you, right, just by the way you answered that question, right, which is you didn't go to features and functions, you went to the problem that is being solved. And I think that for all of our listeners, right, to challenge your partners, if you're evaluating a tool set, to go in and make sure that this is allowing you to answer that use case, address that use case, as opposed to show me the buttons, right? Show me the features. Those need to be there, right? But that's really secondary to, can you solve the problem, which is, I want to be able to tell the story.
That's right. Yeah. Well, there is a part to functionality as well. You want it to be less burdensome on your end user. You're already asking your end user to think in a way that they don't normally think. You're challenging them to do something outside of what they normally do. And you want to have a system that makes it as easy as possible for them to do that, or they'll stop using it, quite frankly. So,
well, even that story that you're talking about telling, Eric, to management, to the board, is as keenly as important, although a different way to tell the story to the end users, right? The risk owners, the control owners, because you're right, to your point exactly. They don't normally think like this. I can't tell you, you could probably tell as many stories, if not more than I could, about how you have to explain inherent risk at about 10 different levels to a risk owner, because they think in terms of we're doing X, Y, and Z, so we don't have any risk. Right, that, or we're doing those things to eliminate the risk. And it's like you're trying to get them to think about it from an inherent perspective. And there's a movement out there today that I think is interesting to just completely eliminate inherent risk. And I'm like, the key there is, what are you going to measure from if you eliminate inherent risk? Right, you have no baseline. So but still talking about that inherent risk to people who just inherently, no pun intended, don't understand risk management, it's such a challenge, right? So to your point about the tool, you need it to be intuitive in a way that allows somebody who isn't a seasoned risk manager to understand how to do it and why they're doing it and the benefit that comes from it.
Yeah, to your point, they see it, they have audit beating them up, they have compliance beating them up, they understand controls, but they do not understand risk.
Yeah.
And having a system that can show both, the control maturity and the risk levels is very important in telling that story, that, my controls are good, but my risk is still high. Maybe I need to automate that thing.
Yep.
How does that work?
Absolutely. Yeah. And that's where, to the point that I think has been really brought forward significantly and very eloquently, selecting the tool to fit the framework and the taxonomy is hugely important, because if you pick the tool first, then you're very likely to fit a square peg in a round hole, because if you select the tool first, to your point, you're looking at the buttons and the ooh-ah moments, and oh, this thing is really super cool because it does this and that, and oh well, it has AI too, so it's got to be amazing. So sorry to
That's
throw
another podcast.
whole
Let's
other
not go
podcast. You're right. But other just people kind of, they set the companies set the hook, but the softwares weren't built by subject matter experts, and so in the long term, in more of a maintenance mode, it just doesn't work, and it doesn't allow for the maturity of risk management ultimately. So yeah, I'll just kind of leave it there.
That's a great way to, I think, to bring it full circle, Dan and Eric. I appreciate it. We covered a lot of ground here, and as you said, right, we probably could keep going on this, and we will avoid the taking the bait to go into the AI conversation, although maybe the AI conversation is a reason for us to come back together. But I think if I were to try and kind of recap this, right, we began with Eric, you introducing the fact that you start with your data and your framework and your risk taxonomy, right? You don't start with the tool, right? And Dan, right, you reinforce that as well, and the fact that you may have to select multiple tools, but when you're looking for a tool, right, you want a tool or a set of tools that are built by subject matter experts, and you want a tool set that allows you to enact this concept of integrated risk management rather than independence. And independent doesn't mean isolated. I think that was a great line, Dan, that you shared with us, and that a tool that aggregates information and rolls it up to that second line, so that you can tell a story, right, as you said there, Eric, but is also as easy as possible and intuitive for those first line folks, right? So that you don't create an impediment for them wanting to be involved in the risk program. And so, ultimately, right, if you again go back and start with your framework and taxonomy, you select a tool set that fits with that, you have a far better chance there, Dan, as you said, of finding a square peg for a square hole, or a round peg for a round hole, as opposed to something that is a mismatch. So I think you guys have given our listeners here some really important themes, and I appreciate you taking the time to share these thoughts with us. And maybe we'll be able to convince you guys to come back, and we'll chat a little bit about AI the next time.
Absolutely, would love to do that again. Honored to be part of this with Eric. Again, I've known him and known about him for a long time, but we've never had this kind of an opportunity. So I was excited for that.
Yeah, same here.
Great. Thanks, Dan. Thanks, Eric. Appreciate the time, guys.